The iShares China ETF down 8 and 4% yesterday, respectively. I want to bring in our closer today, Tom Lydon. He's the CEO of ETF Trends. And, a lot of investors love exchange traded funds, ETFs. It's the best way to play a group. But China seems to be a problem for ETF investors.
Well, they've actually done pretty well. However, right now, especially following up on the press conference with Biden, China's under the radar for sure. So Biden has not backed out on trade tariffs. That's probably a good sign. In addition, as you point out, some of the labor news, that's a scare as well, Cheryl. But one of the big news items yesterday was also the fact that the SEC is looking at Chinese companies and the fact that they're not necessarily adhering to U.S. accounting standards. And this came up a few months ago, but with a new SEC chair, you might get a little bit more serious on it. And if they start delisting some of these Chinese companies from U.S. exchanges, that's going to be a problem for ETFs, as they'll have to remove them from the indexes. So a lot of things not really lining up well for China investors now. And also, when you look at ETFs and the amount of flows that we've been seeing into China, that might be an added concern.
Yeah, well, and I mentioned Adidas and Nike, U.S. companies that once they run afoul of the Chinese government, it's game over. And these companies depend on the consumer and the revenue stream that they get from China. I want to move to energy. We've been following this story out of the Suez Canal and the ship that is still stuck. Oil's been really volatile the last couple of days, but you like energy ETFs and you like financial ETFs, which, by the way, is a strong group today for the market.
Well, they both are. As we're starting to open up, I mean, here we're in Southern California. We're seeing traffic jams again that we haven't seen in over a year, and it's costing more money to fill up your tank at the gas station. So as we continue to open up, we'll definitely see more demand for oil as we open up around the world. That's going to be better for energy companies. And as far as financials, we've seen rates start to creep up. Today, there was an announcement that mortgage rates are starting to creep up a little bit, too. Housing demand strong. That's all good for banks. Banks are more profitable when rates are rising. So a couple ETFs, the Energy Select Sector Spider XLE, we like for energy, and also the Vanguard Financials Index ETF, it's VFH. Those are a couple to consider if you like those sectors.
And we had the FOMC's Tom Barkin on. He was talking about housing and about construction and how millennials are they're building homes, they're buying homes. All of that is very, very good news, and we need that for our economy. Tom Lydon, Tom, thank you very much. Well, here we go. No, we're not at session highs for the Dow. That was 252, but we'll take it 205 to the upside. As you can see, the S&P up 21 at the close, NASDAQ up 14. That is it for me.